What up, everybody? Lonnie here with Charts and Labs. I just wanted to do a little recap video of the video I made this morning um, about some options trading in this little challenge that I got going on. Because the first two videos have been kind of rushed. So I kind of want to take this time to one, reintroduce the challenge, and then two, kind of give a better introductory into options trading for those that are wanting to try to follow along. So I want to just make sure that everybody realizes that I am not a financial advisor. This is not financial advice. This is for education purposes only and entertainment to make sure that you have some familiarity with these markets so that you're comfortable making your own decisions with your own money. So to jump into what I had going on, and bear with me because I am not used to using Robinhood on the computer. But for this challenge and for the sake of it being very user friendly, I thought we would be able to use it. The part of the challenge that I'm doing is I'm using options day trading to create profit, and then I'm going to take that profit and I'm going to buy TXC with it. Or, I was going to originally just buy cryptocurrency, but then I'm just trying to stay in my lane and I'm wanting to add to my TXC position. I normally like using Webull. It's one that I'm more familiar with. I've used Robinhood on my phone because it has some features that are nice and easy to use for quick small account plays. But I've never used it on the computer. I have used Webull a couple times on the computer, but not a lot. So I have a little bit better familiarity with that. So I will revert back to using Webull to show things, because there are some things that I already know how to find on Webull that's easier. So what I did is I took some USDC out of my crypto accounts. I transferred it to my Robinhood account, sold it to have dollars, and here I am trading. I started with $330 going in, and we finished the day at 420. It was up a little bit more, and there was a little late pullback. What I did is I originally bought on Thursday afternoon, right before the market closed. I bought three of these Intel 3850 strike calls, and at market open, I sold two of them for 44 cents. So I bought them for 0.29, sold them for 0.44, which covered my total investment. So I have this one as a free runner to see what brings next week. I almost sold it at 0.5, which was the high today. And then I was like, no, let's hold on to it for next week and see what happens for more. It's already free money. Um, since I had, what was it, about 87 or whatever dollars that I had in that, I had about $247 or $250 that I could do a day trade with. And I like day trading QQQ because it is a tech stocks and it has some volatility. I don't always like to do 0-day trades, but it is a Friday and I was feeling a little frisky and I just wanted to catch a little quick momentum play. I had some work to do today with my actual job, so I had to run and do a quick play. So I was like, QQQ 0-day, let's play. And originally I bought one QQQ. I'm not going to be able to show it to you guys, but let's jump into this Robinhood Legend account that shows you a little bit more detail. Actually, no, let's go to Webull. So on the QQQ, it might still show them, but if we bring this tab up, we can see options. It still shows the ones that were here. We want to filter this to calls. I could probably show you guys what I did. It might bring it up for us. This 616 is what I bought. Let's see if it'll bring it up as a... No, it's not going to bring it up. Okay, so let's try to get into what was the opening today. Is about right. We want to come into like a 15-minute chart so we could get a little bit closer. This was the opening move up. And I don't like to make a move in the market in the first 15 minutes because of volatility and all, and that causes the prices to be very expensive. So I normally skip the first 15 minutes and then I create my range that I'm looking for. And I think it's going to show up on, it might show up if it keeps these charts because I did have it up here. Yep, you can see that I drew these lines. So on the open, we had the open, and then we had this kind of high, and I think on whatever time frame I was on prior, you were able to see it on this. I think we have to go to the 15 minute. Yep, and it's a lot more clear right here. This is where we opened. This was the high mark, and then this was the closing price where it was. So I was using these as range guides, and I got in afterwards after this candle broke above, and it came back in here, and I grabbed one as this wicked above, and then it came back down, and I originally wanted to average down because I saw this long wick down, and then it came back up into here where it finished green still. So knowing the sentiment of the market and what had changed with some things, and I saw a lot of the tech was running, I wanted to average down, and I was taking advantage of that quick little drop. Due to my lack of familiarity with Robinhood, I foolishly accidentally sold my position. So I originally bought it for 122. I sold it for 104 when I was trying to buy for 104, which would have gave me a 111 average. And unfortunately, that mistake cost me whatever it was, 13 bucks or whatever, 15 bucks on a loss. It came back up to the 122 that I originally bought in. I waited for a reconfirmation as this came down. I almost could have bought down here on this, but I let this play out a little bit and get back above this trend line. And then I saw this green candle forming and having that positive momentum, looking to break again. So I grabbed the same call. Instead of grabbing just one, I grabbed two right back at the same 122 price mark that I had, and I sold them for 155 each after it failed to break over the 160. I think it was like 163. On my other video, you saw me live make that trade. For that, closing those out at a 27% profit. So on top of getting the free roll on the Intel call, which will be full profit on Monday, I also made 27% on the day trade to go into the next week. So I took that account from, if we go back, is that how I do this? As I go back, I don't know how to operate Robinhood. Go back. How do I get out of, there we go. So that's where this was. Today it opened, I was up big, I had that call and it started to go up, and then it dropped and I wanted to average down. Instead I sold for the loss, and then I bought back here right at the bottom right before it took off, and I sold those, and I could have got a little bit more, but who's being greedy? I'm trying to be disciplined and make sure that I show good practices in making these trades. Part of the reason why I have that Intel one is because I see a positive sentiment of what could be. So if we're going to talk about options real quick, just to kind of get a breakdown for those that are looking to get into this that have no familiarity and want to see what I'm doing. Calls, are you wanting to see the price go up? Puts, you're wanting to see the price go down. If you think of a contract or an option as the rights to purchase, it becomes a little bit easier to understand what they are. So when you look at like Intel, for example, let's get on this one because then the numbers make a little bit more sense. QQQ is an ETF made of the top 100 tech stocks, so that's why the price is way huge. But let's just go hypothetically look at February. All of these monthly contracts are the third Friday of the month. So February 20th is going to be the third Friday of February if you want to look into the future. So we're looking at calls, so the price is going up, or is looking to go up. So if you look at, say, the $40, because that's a nice round number and easy to math, this is the strike. So this contract is written as the rights to buy Intel at $40. And you're going to look at it and be like, well, that's crazy. It's $36.82. Why would anybody want to buy it for $40? Let's even go further. The bid to buy that contract is $2.05. And all contracts are written for 100 shares. So you have to multiply that 205 by 100. So it costs you $200 to buy the contract that gives you the rights to buy 100 Intel shares at $40. And looking at it with the price being $36.82, crazy. Why would you do that? Well, the idea would be is if the price was sometime in January or in December or by February, before that date, before February 20th, if the price was $45, you have the rights to buy those shares at $40, even though the real life price is $45. So that's where the value comes in. And one thing that you have to kind of pay attention to when you're doing this is your break even price. So when you buy the strike and you add in the cost of the contract, so like that $40 plus 205 makes it 4205. So really, by February 20th, you're banking on Intel being over 4205. And that's where the value of that contract becomes. The faster the price moves up, the sooner the price moves up, and exactly how high up the price moves will increase that value accordingly. And there's a lot of crazy variables that can add into it. And maybe one of these days I'll make a long form video of all those. But there are already a ton of videos on YouTube that I would recommend looking into how to determine those. And what those are called is the Greeks. And if you look up any of those YouTube videos explaining the Greeks for beginners, that'll give you a very, very good breakdown on how they value options trading. So I don't have to make that for you, but if you want me to, I will try to explain my best. But when doing the options trading, what my biggest tactic or strategy that I use is I like to focus on what is a true potential price that it could reach, and then where is the big money going. Um, as much as I can look up and do the countless hours of research and use ChatGPT and every article I can find, and I can do the best charting ever that I can find, I will never have the same resources that these big trillion-dollar institutions have. And one thing that shows up that I can kind of see is where those guys are putting their money. So typically farther out contracts that are putting their money in this is called open interest. This is how many contracts are owned at that strike. And when you look at some of these, you can kind of tell going through the dates, and you'll get a familiarity with it as I show you guys these, is there's a certain level that you could tell is retail or even like smaller whales, but then all of a sudden it jumps up and it's a crazy number. Like this one. January 16th, $60. All of a sudden there's 240,000 people or contracts banking on Intel getting to $60 in a month. That's kind of crazy. And what's even crazier is this huge high spike in this number that came was all the way back in September when Intel, it was about 3 or 4 days, this came across the volume tape, about 3 or 4 days before Intel landed its deal with NVIDIA. They announced a joint venture kind of partnership expanding their AI roles together, and NVIDIA was going to put a $5 billion or $5.4 billion stake in Intel. Well, news kind of stalled and Intel ran, but has been going back and forth. But if we look right here, the $5 billion bet that NVIDIA placed on it, FTC approved it today, and it wasn't that big of a deal. But when it happened back then, it was a 34% deal. So it's been kind of under the radar and it's been kind of suppressed, and a lot of it is due because of the macroeconomics of the economy, especially in risk assets like tech stocks, has nobody wanting to put out their best news. So when I look at this, I see an extremely high range of contracts, and I see a very high interest at these. Now, granted, it is the beginning of the year ones, and yearly contracts are always going to have higher interest than most because they are available first. Because I can go look at this and I can buy January. I can do January 27 and I can do January 28. So that's why the beginning months always have bigger bets than most. But still, if you look at the interest in these numbers are massive on the upside, and that is not retail making these bets. That Intel's going to go up this high, especially considering that a lot of people were so focused on Nvidia for so long, and Intel was kind of down in the gutter. If you look at the daily, um, scroll out. I've been following Intel since it was down here in 17. This was the earlier in April this year, and when I first started, it was about December is when I first started following it. And back then it was about 20, and it tailed in to this range and hit these 20s and 18s, and that's when I started following. I didn't think any way that it was going to get down all the way over here, and it did. But now it's recovered and it's above that. We have the government stake, you have Nvidia stake, you got AI partnerships. The new CEO is phenomenal. He's doing a much better deal. But to jump back to these options interests and this high interest that I'm looking at in Intel at the $60 strike, this is a deja vu moment for me because this is exactly how I hit AMC on its squeeze. When everybody was playing AMC and looking for the squeeze, and it was carrying on beginning of 2021, and the first kind of spike was in January, and then February, March were kind of lowly and kind of crappy, and we're going down, and we were trying to see if it was a real thing, if the squeeze already happened, or if it was done. And then April, I scrolled across the June contracts, and this is when AMC was trading, between $10 and $12 or whatever, or maybe it was eight to $12. I don't remember exactly what the number was, but I saw that the June, I think it was like June 9th. I don't remember the date. Whatever the date was, that month of June, the $40 strike for AMC had 258,000 OI, open interest on it. And it was absurd. It was similar where, I mean, there wasn't 101,000, but there was a lot of small numbers, and then all of a sudden, bam, a massive 240,000. And this is when the AMC was trading under $15. And so I started buying some. I ended up getting about $2,000 worth of them, and I made $90,000 on that play. It was my big my big kind of moment, because then all of a sudden I went from like a $15,000 trading account to, or maybe it was 15. I think I had like 18,000 in my trading account. At one time it was maxed out at the peak. I think I had like 180. So I 100 no 10x. I 10x my account on that play, and then as I was following AMC and tracing it down, I did lose some, but I ended up making over $90,000 on AMC alone. And then I had a bunch of money to play in the market and trade. But that was one of the skills that I learned in that squeeze play, was to go look where big money wants things to move, because they typically get it there. And I'm not saying that Intel's going to squeeze. I don't want to make that comparison and then lead people to believe that because AMC it was a $40 strike and AMC went to 73. I'm not saying that Intel's going to squeeze and go to 75, but what I look at is there has to be a move up into the 50s to bring value to this, to where even if they don't want it to go over 60, they want to at least be able to sell these back to retail at a premium to make their money back. So when I look at these plays like this one, I look to position myself well below it, and anything in the 40s to me seems like a very good deal, especially when you look at some of these being, you know, $30, like a $30 play for the $44 strike. Not saying it's going to go to 60, but if it did, that's a $1,600 contract by January. And so those are kind of how I play and what I look for long-term stuff. And then for short-term stuff, like what I did with the QQQ this morning, I always look for just momentum. I want to ride momentum. As soon as MACD and everything points higher, I want to get in, ride the train, and get off. I don't want to be the last one off. So there's a couple strategies I get. I really like the idea of buying shares, though. If it's your first time, buy some shares and watch what happens and how it goes, so you can follow along with the news and know what's going on in the world. You see how what trends and stuff happen. You can see how things happen in the Mag 7 and like what goes on with these guys. Mag 7 are the seven biggest companies in the world, and you know, you can see what's going on with them, what's going on in the world, and you just start seeing stuff. You know, when airlines are down, you start following some sectors, and it just kind of keeps you a familiarity with what's going on in the world, and how to make some money. You know, how to rotate your money from sector to sector, and if you don't want to get uh, into buying specific stocks and be like, I have some bank stocks. So I have my financial sector. I have my airlines for my travel. I have oil. I have some dividend stocks and communication. I have Verizon, and I have, you know, and go through all that. And you don't want to do that headache. There's ETFs that are already made up. You can do this is the top 500, and there's other ones. There's VU and SPY. These are the tech ones. If you want to stay in tech, these are mid caps. You know, this is the global robotics and AI one. This is one that I think people could get into right now. I think robotics are going to be huge with AI. I think that's going to be kind of the next rally. They're the first sector that's really going to be benefit from this AI pushing chips and stuff is going to be robotics, and it really hasn't gone crazy yet from its open. You know, if we look at like a trend on this guy, you know, something like that. It's not super precise. We could even go, if we want to be more precise, let's go look at more precise. Let's click on this guy and pick that. You know, it's fighting this little bit of a resistance. Let's be more precise so people can see it. Come here. Boom. And we missed that one now. I messed that up. How did I do that? Oh, it's because let me delete this and restart. We're going to be a little bit more precise. Draw. Extended line. Boom. Boom. Touches both of those high points, and we're looking to break above that. So until it breaks above that, oh, look, it did. Broke above it, came under it, and now we're back on it. So to me, if you're looking at trying to get into to some play, you could buy some shares of this and let it ride. If you want to be on the safer side, always buy farther out stuff, and you can buy. Look at these: January, February, March. Look at March and see. You know, what is there any big open interest on this? No, nothing crazy on those yet. February, nothing in February. Must have just popped those ones open because that's an in between. January is the first, March is a quarterly. So then what does January got? And there's nothing that jumps out at us. So pretty mellow, safe bet. Wouldn't be crazy, but something to look at, something to consider and follow. Again, my main focus, I really like Intel. Another one that got talked about today a little bit, and I'm going to close on this one, is PPTA. This is a mining stock. So if you want to have exposure to gold and silver, they have gold and silver. They have a ton of gold. They're in Idaho. But what is unique about them is they are the only USA mine that has discovered antimony. And antimony has came up a couple times, but recently it just came up today. And ironically, they were up almost 5% today, as Bloomberg was talking about it and giving a breakdown of what it is and how important it is to the chips and AI. It is an important mineral that they need to develop these nodes and these wafers and all this stuff for the chips. And the only other place that you can get it right now is China. And all of a sudden, boom, we found some in America. It's barely been discovered. It's the only U.S. mine, so this is a very exciting one. If you go into the research and find out some of the people who've been investing in it, there's a couple big-time billionaires who are buying a ton of this. I got into it just under $10 and rode it up to 20, and it went over 30. I missed that ride. That would have been exciting, but we're back up and look at this thing. It's kind of following this trajectory. This is right on its path again for another breakout If you like silver and gold and you want to have a good mining stock, there's some security in that because of the gold and silver value. But this antimony could be huge. Mining stocks are very much um, tough to buy the options for. So if you're an options trader trying to trade it frequently, good luck with that. But if you're looking at trying to buy shares of a company that could be huge in the future, this is something that I think could be worth dollar cost averaging and buying consistently until they are fully operational and they have that antimony deal. The last mine that got a U.S. deal for supply jumped 50% in one day. So, again, not financial advice, something to consider. There is massive potential on this one for antimony discovery, and that would be very vital to all of these guys, the data centers, chips, and everybody. But I wanted to break in, show you guys a little bit more details about the stock side, because I've been focusing primarily on crypto, especially on the TXC side of things. And I just wanted to shed some more light on those who are looking at doing one, investing to diversify, because as much as you want to be in crypto, if you're in crypto, you should also be in equities and you should also be in commodities. You should have some gold and silver in your portfolio. You should have some stocks in your portfolio. And then I think crypto is a good thing to have in your portfolio. You know, I don't want that to sound like advice, financial advice. I think it's just a key thing that almost every financial advisor that is accredited to give you that advice would say is diversity is key, and having assets that are capable of gaining value is how you grow your value. Because sitting in the bank is letting the banks make money, and you're losing to inflation and to the devaluation of the dollar. If you can't make at least 3 to 5% yearly with your money sitting, if you're not using it frequently, it should be in an asset that's at least producing you at least 5%. There's dividend stocks that are very safe. If you want to learn some of the dividend stocks, I'll go through those plays. Those are great plays for somebody who wants to be steady and putting some money in and compounding growth with the dividends. I'll throw a little quick list up there just for some of those, because that has got to be appealing to most people, is in these dividend plays. Some of these guys are what they call weekly. These are like ETFs and their boost yields. So what these are is like, this is Nvidia, this is Coinbase, this is Palantir, and I don't remember the other one. I think this one's Tesla. And what you are is you're putting money into these accounts, and then these guys are doing options trading for the week on it. And based on how much money they make doing the options trading, they give you back in a yield. So they potentially have massive upside. But of course, if they don't make any money, they can't give you anything. Luckily, they do pretty good at consistently paying. ORC is kind of a little gem that I like, because look at that, dividend, 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 dividend. They are one that pays monthly and not yearly. Also, fun fact, and pretty cool. Let me see if I have that information right here. Dividend $1.44 per share that you own, which paid monthly, ends up being 19.6% yield on the year. That is exceptional. That is better than the S&P 500 yield. That is better than Warren. I think that's right up there with what Warren Buffett makes a year actively trading, and you could just set it and forget it. Now, at the same time, this is a REIT stock. It is real estate based. It is based on mortgages and lending, so it's very rate sensitive. And then also, when somebody has a massive dividend like that, something to watch for is that you probably can't set it and forget it, because you have to make sure that they can maintain that dividend and it doesn't get affected. They're not reducing it. What is kind of cool is you've seen that they've paid this dividend. If we go into this monthly and zoom in, oh, now it's not going to show me the dividend payments. I want to make sure that they're paying it. Weekly doesn't show it either. You have to go to daily. Is the only way to show it. That's awkward. But we can see that they've been paying it even during COVID when it crashed. Or I'm sorry, that's 2023. I want to say they kept paying it when COVID when it crashed. They maintained paying it during a pandemic. That is a huge strength and vote of confidence. If we go all the way back here, even further, um, back to 2016, they were still paying it. 14 cents per share. I'm sorry. So when I said $1.44, that would be one share for a full year. Um, I definitely misspoke on that, so I do apologize. 14 cents per share is the actual dividend, and they're paying that all the way back here. 13. Since 2013, they have not changed. That is phenomenal. That's 10 years of the dividend maintaining. So one would imagine that they're going to continue, but if you are investing in them, I would just make sure that you keep track on their updates to see if they have any plans on not being able to. The other big one is AT&T, but as you can see, they're only 4.6%, and that is mediocre. Verizon is another big one. I think a lot of times when you Google who's the best dividend stock, it actually always points to Verizon because they are 7%. So that is better than devaluation and inflation by double. So that's a very safe one. And Verizon's not going anywhere. They pay quarterly, so that doesn't you don't get paid out as often. So that's why it doesn't compound as quickly. That's why I like ORC for that. So um, just something kind of to be mindful of and look at. But this is longer than I was really anticipating, and I wasn't trying to get crazy. I could get really, really deep and go wild talking about different stocks, different sectors, or from dividends to tech to any kind of specific sector, and maybe that might be something that I do. Maybe I will get into each sector individually and do a little recap and kind of talk about it, um, and just kind of shed some light on some things and maybe go over some strategies and stuff as far as building a diverse portfolio. I'd love to start doing like lives, whether they be Facebook lives or Zoom calls, if there are some people who are interested in that. Um, to field some questions, or maybe submit me some questions in comments or DMs if you guys want to, for some inspiration, and I can tailor make a video for you, talking specifically about stocks, about options trading, gold and silver markets, real estate, or crypto. If you want me to stay on the crypto train, if you want me to get deeper on something specifically on TXC, as a lot of my followers are TXC community members. If you want me to get a deep dive and give you more details about Intel because you want to follow that train, um, I can do that. So I hope that everybody takes this with a grain of salt, realizing that I'm not a professional. I just like talking about it, and I want to give you guys the ability to make these decisions and make some money. So please give me some feedback and tell me what you want to see next, because I enjoy talking about this stuff, and I have no problem sharing what knowledge I do have and hopefully giving you enough confidence to do similar investing on your own. So, thank you if you stayed around for this whole video. I definitely went a lot longer than I was anticipating. I just wanted to do a short little unrushed recap of what happened today, so that I can get into doing this on Monday as more of a series, and it's familiar with for everybody to know what's going on. So again, thank you guys very much, and I appreciate all of you, and have a good weekend.